Foreign investors have withdrawn a net 1 trillion rand from SA's bond and equity markets over the past 10.5 years. Asset management firm Stanlib says this is due to successive credit downgrades, the sharp deterioration in the country's fiscal position, rampant corruption and the sustained decline of state-owned entities. Stanlib chief economist Kevin Lings has commented that there is no escaping the urgent need for government to implement key economic and structural reforms to address the situation. The Please Call Me saga will be further drawn out. Vodacom has stated that it will appeal the judgment by the Supreme Court of Appeal and will bring an application for leave to appeal the decision before the Constitutional Court. The Supreme Court of Appeal ordered Vodacom to make a new offer to the inventor of the Please Call Me service, Nkosana Makate. The mobile service provider says it was surprised and disappointed with that judgment. Vodacom has been battling Makate in court for 2 decades over compensation for his idea. Sappi has started 2024 on the back foot. The paper and packaging group has suffered a profit hit in the first quarter. EBITDA excluding special items has fallen 46%. That's due to lower production volumes due to planned maintenance shutdowns. Sappi doesn't expect much improvement. The firm says that protracted macroeconomic uncertainty will weigh, and so it's forecasting EBITDA for the second quarter to be similar to that of the first. Saga Technologies has narrowed its net loss by 57% during its second quarter. That's thanks in part to the performance of the firm's fintech business. Outgoing CEO Chris Meyer has described the results as excellent and says the team's hard work is paying off. Looking ahead for the quarter to end March, Saga projects revenue growth of around 2.7 billion rand, while adjusted core profit is forecast to be between 170 and 190 million rand. Sarithi's investment in water treatment systems could become a significant game changer. That's according to Sarithi Resources CEO Mike Deke. Deke, who was speaking during a panel discussion at the mining indaba underway in Cape Town, says the move could see the firm selling water to municipalities as constraints in the water-stressed country continue to bite. In international news, Total Energies reported a 31% fall in net adjusted income in the fourth quarter, mainly due to lower oil prices and refining margins. Let's take a look at this report for more.
Profits have taken a big hit at Total Energies. The French oil giant said Wednesday that net income dropped 31% over the fourth quarter. That saw a fall to $5.2 billion, below analyst forecasts. Like peers, Total had benefited from the surge in oil prices following Russia's invasion of Ukraine. But crude prices have since fallen back, taking a bite out of earnings. Total also faced lower margins on oil refining. Even so, the company says it will return more cash to shareholders. It plans to increase dividends and do $2 billion in share buybacks over the first quarter. Wednesday also saw numbers from Norway's Equinor. It saw operating profit beat forecasts despite the oil price slide. That came after it managed to increase output towards the end of the year. A day earlier, BP had raised hopes for oil companies after its earnings comfortably beat forecasts.
And Germany has been hit by a series of strikes since the start of the year, as unions press for higher wages and improved working conditions in Europe's largest economy. Let's check in with our reporter Darling Lachela with further insight.
That's right, Zinati. Germany's winter of industrial action continues. The country's largest trade union has announced a warning strike by airport ground crew and technicians, which will hit air travel in Germany. And joining me now is DW correspondent Chipanda Chimbelu with more of the detail. Thanks for your time today. Now, Chipanda, what's the latest on this strike?
Thanks for having me. Well, this strike is about a wage dispute. To cope with the country's inflation in recent years, Lufthansa offered workers a 13% salary hike over the next 3 years and a significant one-time inflation compensation bonus. But Germany's largest trade union, Verdi, says the increments are too low. It rejected Lufthansa's offer in the second round of negotiations, and it is putting pressure on the company with a warning strike that will last for just over 24 hours, from early morning today to Thursday mid-morning. Now, the strike will affect passengers traveling through Lufthansa's main hubs, so that includes international airports in Frankfurt, Munich, and Düsseldorf. More than 100,000 passengers could be affected, with anywhere between 80 and 90% of Lufthansa's flights scheduled cancelled on Wednesday. That's why Lufthansa has advised its passengers to make sure that their flight hasn't been cancelled before heading to the airport.
Now, this isn't the only strike in Germany in recent weeks. Why are workers so unhappy?
Well, inflation and worker shortages are two reasons. Salaries haven't been rising fast enough to cope with the inflation we saw during the COVID-19 pandemic and the energy crisis from the fallout of Russia's invasion of Ukraine. Ordinary Germans have seen their spending power shrink. And that's at a time when most of them are dealing with shortages on their teams at work. There's actually often more work with fewer people to do it. And that's what we're seeing now, especially in the transportation sector. The strike today is just the latest. So far, we have seen workers from the aviation sector, the rail sector, and even local transportation networks across cities hold strikes this year. For trade unions, the fact that there's a worker shortage means that they have more confidence to carry out strikes and put pressure on employers. And workers are noticing that. Membership in trade unions rose last year.
Lastly, what can we expect from Germany's trade unions moving forward?
Well, we could see more strikes. Experts say there are more strikes now than in the decade ending 2020. And people are also noticing them more. While there are normally strikes by workers in sectors such as construction and the chemicals industry, the strikes we have seen this winter are in transportation. So just about everyone notices, especially when they or someone they know cannot get from A to B. But when it comes to strikes in Europe, Germany is far behind other EU countries. The European leaders of striking are Belgium and France. Over the last decade or so, Belgium was averaging 96 strike days a year for every 1,000 workers. And France wasn't too far behind, but Germany was at only 18 strike days for every 1,000 workers. Now that's less than a fifth of where Belgium and France are, so the situation here isn't comparable to Europe's leaders in striking.
Let's leave it there. Thanks so much for your time and insights. Chiponda Chimbelu joining us from Berlin.